How to trade the US dollar before and after the non-farm payrolls. Please read the disclaimer. It's important to understand the risks. Please follow us on Instagram. You can subscribe to our YouTube channel. You can learn a lot from our videos, from our webinars, video analysis, tutorials. Yeah, and don't forget that you can send an email to support if you have questions. And if you are not a VIP member and if you want to join us, you can access the link posted right below this video. So dollar index. So how to trade the US dollar before and after the. So today we'll have the non-farm payrolls, also the unemployment rate, which is expected to drop, and also the average hourly earnings. So unfortunately, in the short term, the dollar index extended its sell-off. It has dropped deeper, and right now it has reached 101.64, 101.74 at this static support, and right now it tries to rebound. And the current bullish momentum, forced the US dollar to appreciate in the short term versus its rivals. Okay, so let's take a look on the economic calendar. So later, the non-farm employment change is expected at 325,000 in May versus 428,000 in April. Unemployment rate is expected to drop from 3.6% to 3.5%. Average hourly earnings 0.4% growth expected versus 0.3% growth in April. So also don't forget ISM services PMI, final services PMI. So high impact indicators, and don't forget that the volatility could be high around this economic data, around the US data dump, so you'll have to be careful. But in my opinion, if the US data will come in better than expected, okay, these indicators to report I don't know, in lines with expectations data or better than expected data, then maybe the dollar index could come back higher. Okay, so personally I believe that as long as it stays here above this support zone, above the lower medium line, and as I've said, unfortunately, yeah, this retreat correction, this sell-off drop in the short term here on the dollar index, it was a larger one. Yeah, because personally maybe I wanted to see something like this. I've expected something like this, but the dollar index reached this strong support zone, and right now it tries to rebound ahead of the US economic data, only because the traders, the investors, traders are expecting yeah, positive maybe economic data from the US later today. So if the US data will come in better than expected, in line with expectations, maybe the dollar index could come back higher, at least maybe towards this key level 102.35, and this scenario could force the US dollar to appreciate versus its rivals. Okay, something like this. And in my opinion, worse than expected US data could force the dollar index to drop in the short term. Maybe it could come back down to retest the lower medium line, but also in the short term, maybe the dollar index is oversold, and that's why right now sell-off, it could retest the immediate support levels, downside obstacles before turning to the upside. So yeah, as you already know, the Federal Reserve is expected to hike rates, to continue hiking rates in the next monetary policy meetings. So personally, I'm expecting somehow the dollar index to rebound, okay, after this massive drop, after this correction. Here something like a falling wedge pattern, and aggressive breakout here, retest, and right now it tries to rebound. And of course, the dollar index needs strong support from the US economy, and as I said, better than expected US data could help the dollar index to come back higher, and maybe better than expected US data could help us to identify new US dollar longs. Okay, so this is my opinion here about the US dollar before and after the non-farm payrolls. Don't forget to subscribe to our YouTube channel, and if you want to join us, learn to trade forex signals, guys. Bye bye.